I've never in my career seen sentiment like this, both in crypto and the stock market. Twitter is so bad. I put up a relatively bullish chart, just marginally bullish, to say maybe the Nasdaq's priced in a deep recession. I must have had 100 comments of anger. How dare I suggest? I'm like, wow, people, I mean, there's anger, resentment, fear at this moment that of a scale that wasn't in 2008, wasn't in 2001. I've never seen anything like it.
In an interview with Bilyeu of Impact Theory, macro guru Raoul Pal gave his thoughts on the FTX collapse. Raoul gave a very optimistic view, stating that not much has changed despite the media spectacle of Sam Bankman-Fried and FTX. Raoul said that the real issue is liquidity, which was a problem before the FTX collapse. Raoul gave the analogy that if you have $5 and there are 10 people wanting $1, you will have a problem and 5 people will walk away empty-handed. This was the issue from a macro perspective in June. Yes, FTX's collapse didn't help at all. But Raoul believes that at the end of the day, if you do not use leverage, buy at the opportunities when the market is low, hold for the long term, avoid the noise, you will come out on top. But before we listen to Raoul Pal, if you are new to the channel or not subscribed, make sure to subscribe so you don't miss any videos.
Firstly, the central banks are taking liquidity out of the system and have been for a while. That has hit all assets. And so crypto down 75%, much like many technology stocks around down about the same. So that's been going on. That's been putting the market under pressure. At the same time, when you get to the bottom of the liquidity cycle, if you think about it, if you think there's a bunch of people in the street saying, hey, buddy, can you lend me $1? And you've only got $5 and there's 10 people asking, well, 5 people aren't going to get it. And that's what happens to the bottom of the liquidity cycle. Those who really need money don't get it, and they blow up. So in June, we spoke in the aftermath of that. That was basically the blowing up of the liquidity cycle. Suddenly you find out that all of the people who were running leverage in crypto were getting blown up, and they couldn't get any money from borrowers, or they couldn't get any money, from investors. And so that had this huge ramification. So June was actually worse than now, because pretty much it triggered everything. So there is an expression, Warren Buffett's used it, is when the tide goes out, you see who's swimming naked. So the tide out in this is liquidity. And liquidity is driven by central banks trying to stop inflation. So they raise interest rates when they think there's inflation. It slows down the economy. It's harder to borrow money. The whole economy slows down and we restart. It's called the business cycle. And you and I have talked about this in the past. So the economies are cyclical. They're naturally cyclical because the credit cycle, even without central banks, is you kind of lend or borrow too much money, then something happens at the margin and you're like, oh shit, I borrowed or lent too much money, and you pull it all back again and then you do it again, right? So the central banks try and soften that cycle, but they still create it and use it to try and not let economies go too far, like hyperinflation or depression, whatever it is, right? So that's what they're trying to do. That cycle drives the movement of asset prices. And so that's the stock market, the bond market, equity market, the currency market, the crypto market. And with that cycle becomes the human emotion cycle. And the human emotion cycle is, I'm making a fortune, I'm a genius, I can never go wrong, I'm going to be rich, extrapolate, future vision of myself is now going to be driving a Lambo and, etc. And if you think about it, and that's exactly what happens to all of us, and we have to fight that demon, is you start extrapolating out and you start thinking, my vision of my future self has now been ratcheted up. So investments are just a manifestation of your future self, right? That's what we're trying to do. So you got that vision of what you'd like to be, and to get there, you invest. because that will deliver that. So if your investments do well, you start stupidly readjusting yourself higher all the time. So then what happens is when the market goes against you, you have to go through the emotional inner journey of, oh, maybe I won't get there, right? That's really hard for people. It's emotionally really hard to kind of plant a flag on that's what my future is definitely going to be, definitely, because I'm really good at this investment game, to I was completely wrong. And what happens is you then over extrapolate on the downside. If this continues, crypto is going to zero. All of my savings that I've been dollar cost averaging, listening to Tom and Raoul, it's all bullshit. You know, this has been a scam. It's the exact opposite. But when you step back, you take a nice logarithmic chart of Bitcoin, and anybody can do that on TradingView or any of those charting things, and it's a nice, smooth, upward trend, which is the adoption of cryptocurrencies and blockchain technologies as a new financial system and a way of exchanging value on the internet. In the middle of that, on a log chart, it just looks like it slowly does that. On a linear chart, it looks like this. But no, it looks like, more correct, it does this, collapse. And what happens is everybody goes, when it goes up on a linear chart, everyone goes, it's a bubble. People who aren't involved. Then we all get to the over extrapolation of like, we're all going to be billionaires, let's order my Lambo. Then it starts coming down, it's denial, typical, you know, the human phases of emotion. And then you get to anger and despair, which is where we are now. But that's all, that whole story of humanity, liquidity, central banks is all within this long, smooth uptrend that keeps going. And people forget it. They forget it at the bottom and they forget it at the top. And it's as simple as that. So to go back to what you were suggesting, has anything changed in the crypto market? Not a thing. Is the technology being utilized? Has Solana just agreed to use their blockchain with Meta for NFTs? Yes. Are Google working with Solana? Yes. Is Ethereum being built out? Did DeFi fail? No. Does the decentralized financial system idea work? Yes. Are cryptocurrencies being exchanged in a value system on the internet? Yes. Is the number of people growing in that ecosystem? Not a lot, because it's stabilized. But if you look at the past cycle, so the 2017 peak to the low in 2019, we lost about 80% of the active wallet addresses. When I look at it now, we've lost about 30. Because the adoption keeps rising. It really is a psychological game. And it's a long-term game because, you know, and you've talked about this, is we're not involved because we can make money over a 1 year time or a 2 year time. We're saying, listen, the bet here is if you hold on and if you add at the bottom of the panic cycle and just keep holding and don't use leverage and just be sensible about what you're doing and don't keep checking the market every day, the probability of you coming in at the end of the decade and having manifested your future self in a way that probably might be quite unexpected. And if you do that, you won't go through that emotional journey.
To watch the full interview, check out the link in the description. What do you think of Raoul's thoughts here? Do you agree that FTX collapse won't have a big effect on the state of crypto as many believe? Leave a comment. If you are new to the channel or not subscribed, make sure to subscribe so you don't miss any videos.